Me, John, from the American Stock University, upholds the fundamentals of United States stock investing. August 1st, let's start today's United States stock news. Welcome to Mion's channel, where we stick to the fundamentals of United States stock investing without any exaggeration. A new month has begun, and August 1st has a special meaning for me. After today's broadcast, I think I'll be taking a break from YouTube for about 2 weeks. As I mentioned in advance, my family and I will be moving to Kuala Lumpur, Malaysia. I started my YouTube channel in June 2020. Actually, it's almost unprecedented for me to take more than a week off. As I showed you before, over the past 5 years, I've shared 1,865 videos with you, which means I almost made one video a day. So personally, since I've hardly ever taken more than a week off like this, I wondered if it's really okay for me to rest like this. During this time, I also worried, what if all my subscribers leave? It feels a bit strange and empty. I'm sure many of my subscribers also feel a sense of emptiness while I'm taking this break. Some of those people genuinely need information on investing in United States stocks. There are people who say, I can't miss even a single day of Mijun's insights. As I suggested yesterday, I think it would be good for you to either sign up for Mijun's paid membership for about a month or take advantage of the 50% annual discount benefit that's available until August 3rd. I'll provide more details in the pinned comment in the description box. Now, with a bit of excitement and a bit of worry, let's begin August 1st. Let's get right into today's big news. As always, I'll start by reading the comments left by our valued subscribers. Personally, since I broadcast for about 2 weeks, I felt a strong desire to share a lot of useful information and helpful stories with you all today. Thank you. So today's topic, which is the most important thing I want to talk about, comes from someone using the identification Ireunen. I always enjoy watching your broadcasts every day. It's just that, in a video from 3 or 4 days ago, you warned us that a correction was coming. But since then, up until today, especially tech stocks seem to be rising tremendously instead. Do you think the correction signal you mentioned a few days ago is no longer something to worry about? Since you haven't said much about a correction after that warning message, I'm curious if your perspective on a correction has changed now. Thank you. That was a very important question, and I'll read another question together with it. The next question is from someone using the identification W2. Miho, the market is currently in a grid of greed, and I remind myself every day of Warren Buffett saying, be fearful when others are greedy, and be greedy when others are fearful. Especially these days when the market is soaring, I also find myself getting greedy. Especially when I look at Microsoft and Nvidia, I feel it even more. Honestly, I really want to buy these two stocks, but I'm worried that my greed might make me buy them at too high a price right now. Especially since the dollar is strong and has gone over 1,391, I'm even more worried that I might have missed the right timing. I'm wondering if strong stocks will continue to be strong even in a market where there's less greed, and whether I should trust them and hold on, or if I should wait with cash until a fear-driven market comes and there's some correction. Maybe the reason I'm hesitant even in a long bull market is because I haven't studied the stocks enough. You've asked a very important question. It's difficult to give a precise answer to this. Right now, both of you have different concerns. I'd like to give you a keyword, and the message I want to share is that I hope you can let go of some of your greed. As I always say, investing in stocks is betting on the future, and when you bet on the future, nothing is certain. Because nothing is certain, what we rely on is probability. So we look at things like, what are the chances of this happening, and what are the chances of that happening, and we invest based on those probabilities. So a couple of days ago, I mentioned that there is a high possibility of a correction coming, but what I want to convey is that this doesn't mean a correction will definitely happen or that it will start tomorrow. Please don't interpret it that way. What I meant to say is this. Now, various indicators are showing signs that the market has entered an overheated state compared to before. So what I'm saying is that compared to a month ago, and even compared to 2 weeks ago, the likelihood of a correction occurring has increased. So when I talk about approaching things probabilistically, I hope that those who hear this message will also take it in probabilistic terms. So after watching my broadcasts, if you hear that this stock is really good right now and go all in, or if you hear that Mijuan is likely to have a correction and sell all your stocks, it really pains me. That's not what I want you to do. I always emphasize the importance of having a certain percentage in cash, so there's a high probability that a correction will occur. When I say that things are technically too hot right now and it looks like we might take a short break, I hope you'll interpret this as a suggestion to check whether you've secured enough cash according to your target allocation. For example, let's assume that your target cash allocation is 20%. But right now, the stock market has gotten really hot. Because it's been running so hot, the chances of a correction coming soon have increased. The probability has gone up. At times like this, to put your mind at ease at the very least, try to increase your cash holdings to your target like 20% or maybe even 25% or 30% so you can feel more secure. In a challenging market, corrections can be unsettling. However, increasing your cash holdings provides flexibility to ride the upward trend more comfortably. It's good to approach it with this perspective. And on the other hand, for example, if the stock market keeps falling and eventually reaches a stage of panic, at that time, it doesn't matter if your 20% cash ratio drops a bit. As you keep buying stocks, even if your cash ratio drops to 10% or 5% during the panic stage, it would be good to show a bold move by going all in on stocks and giving up a bit more cash. That's what I want to say. But betting on probabilities like this doesn't mean you go all in with all your cash or that you turn everything into cash just because there's a high chance of a correction and wait until it happens. I want to emphasize once again that this is not the kind of advice I'm giving you. Let me summarize the United States stock market situation from yesterday. If you look at the S&P 500 map, it's actually even worse than yesterday. In fact, red is completely dominating. Except for Microsoft, Amazon, and Meta, almost everything else fell. You could even exaggerate and say that that's how bad the market breadth has become. As I mentioned yesterday, a shrinking market breadth is a very bad sign. In fact, yesterday the market breadth dropped all the way down to 55 and 46. Now, in fact, only 55% of stocks are trading above the 51-day moving average and the rest are all below it. So the momentum has really weakened. What that means is this. In fact, it can be interpreted as only a few stocks have been doing well recently, while the rest are experiencing a lot of volatility. Now, there's another problem that has come up. As you can see, the fear index has risen significantly. Well, it's still below the 201-day moving average, but it has surged to a high level of 18 and 68, which we haven't seen in the past 2 or 3 weeks. So if it goes up just a little more, there's a possibility that this fear index, volatility index, could rise above the 201-day moving average. And that can be summarized as a very bad sign. Now next is the fear and greed index. It dropped a lot, right? It fell all the way to 61. So, the dramatic drop in the fear and greed index, which was in extreme greed being adjusted downward, is a very bad sign. It's good when it rises and bad when it falls, similar to stock prices. The momentum is weakening and you can interpret it this way. Now next is the market score. The market score has also been in greed for a very long time, but now greed has dropped to extreme greed. It's pointing to 74. You can interpret it this way. So, if you compare this with the stock price chart right now, it's actually quite interesting. When we look at the stock price chart, a pattern that looks like a head and shoulders has formed. When you see a head and shoulders pattern on both sides of a stock chart, there's a high probability that the stock price will continue to decline. What that means is that market score is also very likely to keep declining. We should also consider the potential for the stock price to decrease even more. That's one way to understand it. Now next is the performance of Mijuan Top Pick. The performance of Mijuan Top Pick. It's quite interesting when you compare this with the stock price chart. When we look at the stock price chart, a pattern that looks like a head and shoulders has formed. There's a head and shoulders on both sides, right? Now, when you see a head and shoulders like this, there's a high possibility that the stock price will keep falling. What that means is that the market score is also very likely to keep declining. That's what it means. We must also consider the chance of the stock price dropping even more. That's one way to understand it. Next is the performance of Mijuan Top Pick. Recently, how has Mijuan Top Pick been doing? Despite the market downturn, most kept rising and maintained a positive trend until yesterday. Only 6 stocks were up and the rest all fell. Meta performed the best, rising by 11.25%. Second, MicroStrategy was up 1.73%, Talos Energy up 1.13%, Vistra up 0.72%, Trade Desk up 0.62%, and Coinbase closed up 0.07%. Now, on the other hand, all the rest fell. Palantir was down 0.16%, B2 was down 0.23%, Taiwan Semiconductor Manufacturing Company down 0.53%, and Bitcoin down 0.58%. But if you look at the price, it dropped significantly all the way down to 115,000. NVIDIA fell 0.78%, Celestica 1.25%, Advanced Micro Devices 1.78%, Alphabet 2.36%, First Solar 2.46%, Broadcom 2.95%, and Tesla 3.38%. Credo dropped by 3.84%, showing the worst performance. Today is the first day of August and the first day of every month. I'm sharing the performance of the Mijun portfolio with you, and fortunately, I'm able to share the returns with you on my last broadcast from the United Kingdom. The historical statistics of the United States stock market didn't let us down this time either. I'm sure you remember. I mentioned earlier this month that historically, the Nasdaq index has performed best in July compared to other months of the year. I've shown you these kinds of statistics before, haven't I? But this time as well, it gave us an incredible return. And at the beginning of every month, I continuously share the investment performance over the past year and the results from the previous month. Let me explain the reason for that once again. For those of you who trust the investment information provided by Mijuan membership and are investing in United States stocks with me, Mijuan's momentum investment strategy is actually a rather unfamiliar and new approach. You can think of it as me continuously showing you whether this kind of momentum investing actually works effectively so you can see for yourself. So traditionally, you would buy stocks whose prices have fallen and sell them when the prices go up. But for over 2 years now, I've been saying the opposite. When a stock goes up, you should buy more. And when a stock goes down, you should consider selling it. That's what I've been telling you. You can think of it as my way of showing you that even if you manage things like this, the returns can still be pretty good. Now, the returns I'm going to show you from here on out, this is a screenshot of the Samsung Securities webpage that I use. You can always manipulate your returns by buying more of the rising stocks or selling off the falling ones. So I'm not showing you this kind of cumulative return. The screenshots I show you include all my past trades, new purchases, additional buys, taking profits, cutting losses, and rebalancing, so they reflect my real unfiltered investment returns. I hope you keep this in mind. For your reference, the final goal of the Mijuan portfolio is 3.3 billion won. To achieve this goal within 15 years, that is from 2020 to 2035, I'm aiming for an average annual return of 20%. Now, 20% is just the average. There are both bear and bull markets. So, since market returns can vary greatly, my relative goal is to consistently achieve more than twice the average annual return of the S&P 500. I think it would be good if you could keep this in mind. Now first, let me show you the investment performance over the past year. In Q4 2024, the period return was 35.07%, and Q1 of this year was quite poor. There was even a negative return of 22.3%. At that time, my stock investment losses exceeded 220 million won. In Q2, the stock price rose by up to 26.15%, increasing the return on Mijuan's portfolio. The second quarter profit of 227 million won offset all first quarter losses with surplus remaining. That's one way to interpret it. Now the third quarter would be just the month of July. As you can see, we achieved a truly impressive return of 12.48%. So if we sum up the returns for the whole year, it's 56.85%. And during that year, the money I made from stocks was nearly 400 million won, so I was able to achieve successful returns and profits, and now I can share this with all of you. And I'll also show you my investment performance from the past month. As of the end of June, the cash assets I had were just over 1 billion won. But if you look at the end of July after just 1 month, it increased significantly to 1.231 billion won. So my investment profit was 136 million won, and the monthly return was 12.48%, which is a personally very satisfying result. And my personal goal is to achieve more than double the market return of the S&P 500. Now, if you look at the past year's returns as of August 1st, the S&P 500 went up by 14.79% and the Nasdaq rose by 25.91%. So, it's undeniable that the market has been really good. But what about the United States momentum strategy portfolio? It went up by 56.85%, really proving once again that selling falling stocks and buying rising stocks can yield good returns. And it's even better during the month of July. The S&P 500 increased by 2.17%, while the Nasdaq climbed 3.7%. For the index to rise by over 2% or 3% in a single month is an excellent outcome. However, Mijun's momentum strategy portfolio soared by a whopping 12.48%. As you can see, when stock prices are on an upward trend like this, momentum investing really shines. Now let me briefly show you the list of the best performing stocks in July 2025. I've sorted them here. Based on the monthly return, Talon Energy soared by 29.85%. It showed an amazing trend. Celestica was up 28.03%, Advanced Micro Devices was up 24.25%, Trade Desk was up 20.79%, and Credo was up 20.48%. So, in conclusion, you could say that mid-cap stocks rather than large-cap stocks showed a really strong trend. Depending on market conditions, blue-chip stocks and small-cap stocks perform variably. So, I've found that mixing different types of stocks in your portfolio can be a very effective strategy. Now, personally, I achieved good results like this, but if any of you feel a bit disappointed, if you couldn't buy many stocks during the recent correction and your returns weren't that good, for those of you in that situation, I hope you don't dwell on it too much. Our investing journey has to continue, and it's obvious that we'll go through many more bull markets, corrections, and even bear markets in the future. So, if you got scared during the rally that started in April and couldn't make a profit, you just need to do better in the next correction. You gained valuable experience this time. The most important thing is not to stop investing and not leaving the market. So as you gradually build your investment muscle, you just need to do a little better next time. I want to share this message with you as well. Right now on the screen, you can see the United States Stock Market Futures Index. Dow Jones futures are down 0.83% and S&P 500 futures are at minus 0.85%. And as for the Nasdaq, where our favorite tech stocks are gathered, it's plunging by nearly 1%. Now, when the futures index drops by as much as 1%, that means among the stocks we hold, there will often be some that fall by at least 5%, 7%, or even 8%. So in a way, we can also hope that this is the correction that Jun Kim, whom I introduced earlier, has been eagerly waiting for. Now let me start by explaining why the atmosphere isn't so good, okay? President Trump adjusted the tariff rates just before the deadline. Let me briefly explain what it's about. President Trump signed an executive order revising tariff rates on dozens of countries from 10% up to as much as 41%. He also announced that the new tariffs will take effect starting August 7th. So it's not that they've been postponed until August 7th, but rather they've been finalized now and will be implemented from August 7th. It simply means that preparing the administrative procedures will take a little longer. That's the right perspective to have. And a new regulation has been introduced that imposes an additional 40% tariff on all transshipped goods intended to evade tariffs. This is really not good. Let me explain what this is. Let's assume that among the exporting countries, there are some where exporting directly results in very high tariffs. For example, if it's Jungkook doesn't export directly to the United States. For example, if they export through Daehanminguk, the tariff for Korea is only 15%. So there's this strange situation where they only have to pay 15%. But what the United States government is talking about here is this. If you try to lower tariffs like this and use this route to do something else, you'll be charged an additional 40% tariff if you're caught. You can think of it as this kind of regulation being introduced. From China's perspective, this could feel very unpleasant. Now, in addition, countries like Syria and Laos are subject to very high tariffs, as much as 41% and 40%. Canada is also expected to take a significant hit. Except for certain items, the existing 25% tariff has actually been raised to 35%. Therefore, the second shock of the Trump tariffs is approaching. I think we can sum it up like this. Now, the situation isn't good. That's because recently, stock prices have gone up way too much. For investors with a short investment period, they've probably been wondering, when should I sell? When should I sell? And waiting for the right moment. But then a really great trigger happened at just the right time. So, for investors who were eager to realize their profits, a very valuable opportunity is appearing for them to sell their stocks all at once. For short-term investors, high volatility is actually helpful. Investors can capitalize on stock market volatility by buying when prices drop and selling when they surge. For those waiting for such opportunities, President Trump's actions are creating positive conditions for stock prices to fall. And that's why I'll summarize that the Nasdaq index is currently down as much as 0.96%. Along with President Trump's tariffs, there's a company that's causing the futures index to drop, and that's Amazon. Amazon is the fourth largest company by market capitalization, and right now its stock price is down more than 8%. Now, as you might have guessed, the reason Amazon's stock price is dropping like this is because its earnings results were more disappointing than expected. Now, before I show you Amazon's earnings results, I wonder if any of you have noticed something. Jihoon Mi's top picks, it used to be 19, but it changed to 18, right? Yesterday, because of the earnings results, I removed Amazon from Mi's top picks. So let's focus on just how bad things were that I completely removed Amazon from Mi's top picks. Let's take a look at this together. First, let me explain the important parts of the management's comments. Andy Jassy, the chief executive officer, reported sales of $167.7 billion, a massive sum. However, it only increased by 12% compared to the same period last year. As you may remember, companies like Meta are seeing their sales increase by 22%. So in a way, it makes you worry that Amazon might not be keeping up properly in the age of artificial intelligence. Operating profit is $19.2 billion. It increased by 31% compared to the same period last year, which sounds good at first glance, but compared to the previous quarter, the growth rate is slowing down now. Now, there were also some positive news items. Well, for example, they reported strong customer adoption of fresh food. It means that a lot of people are now buying groceries through Amazon, like fruits and vegetables and things like that. This year, 75% of the customers who used this service were buying fresh food from Amazon for the first time. So more and more people are buying groceries from Amazon. And what about the 20% of customers who used the service? They made multiple repeat purchases within the first month. So they shared this positive news that in the near future, many people will be grocery shopping through Amazon. And they mentioned Amazon's record-breaking Prime Day, saying that this time sales hit an all-time high during Prime Day. There was a good reason for that. Originally, Prime Day only lasted for 2 days, but this time it was held for 4 days. So keep in mind that it's a bit difficult to make a direct comparison. Delivery speed is also constantly improving. In Q2, we increased orders shipped via direct routes by over 40% year over year, significantly increasing the number of items delivered directly. So, as a result, we reduced the average distance the packages travel by 12% and the number of handling times per unit by almost 15%. So what we're saying is that efficiency is greatly improving and productivity is increasing. And Amazon is really leading the way in automation robotics as well. Now they've deployed their 1 millionth robot and they're currently operating 1 million robots, so they're truly unrivaled in this area. And they've also announced the launch of DIPLETE, which can improve robot utilization efficiency by as much as 10%. Amazon's advertising is also impressive, currently ranked third. With sales reaching $15.7 billion, their advertising revenue grew by 22%. And there was another really good piece of news. There was a notable partnership with Roku and Disney. So now, merchants who sell products on Amazon can advertise their products not only on Amazon, but also on Roku and Disney channels, opening up a direct path for e-commerce. Personally, I think this is a really great partnership. Now, you might ask, then why did I remove the stock from the United States top picks? This is exactly the part. Amazon Web Services had a year-over-year growth rate of only 17.5%. I think this is a very low figure, something to be concerned about. Now, another thing is the operating margin of Amazon Web Services. In the first quarter, it was a record high of 39.5%, but in the second quarter, it dropped to 32.9%. This is precisely why Amazon received such high ratings last quarter. Amazon Web Services margin was close to 40%, so there were expectations that Amazon Web Services would generate more and more operating margin. But this quarter, it dropped to 32.9%. There's a very important clue here. Seasonal stock-based compensation. This means they gave bonuses to executives in the form of stocks. But what's more important is that the depreciation expense is too high. Depreciation expense, as you learned a lot from Chief Executive Officer Kim Min-jung's American Stock Elementary School, is this. When we use something called capital expenditures after making capital expenditures, we eventually have to record these capital expenditures as expenses little by little in the books. Therefore, depreciation expense ultimately has to be treated as an expense. The point is that this is way too high right now. So far, they've invested a lot of money to buy things like GPUs, and this investment is eventually coming back as expenses. And here we can see numerically that the trend of these expenses increasing is very steep. And in the Q&A, a very important question was raised. Mark Stephen, who works at Everco, asked about Amazon Web Services' order backlog and supply constraints. So what was the answer? As of June 30, the order backlog was $195 billion, a 25% increase from the same period last year. Something seems a bit strange, right? Amazon Web Services' order backlog keeps increasing. It went up by as much as 25% compared to last year, but right now the sales growth rate isn't even 20%, it's only 17%. Something's not right. Andy Jassy, the Chief Executive Officer, explained it. I don't think we'll be able to fully resolve the capacity issues needed for our current demand within just a few quarters. I think it will take a few more quarters. Now, what this means is, right now, there are a lot of companies lining up to use Amazon Web Services, that is, Amazon's Web Services and Cloud Services. Many companies really want to use cloud services. Compared to last year, the backlog of orders has increased by as much as 25%. The problem is the lack of capacity to handle this, with insufficient GPUs and data centers. So, they're saying that it will take several more quarters before we can serve all these customers who are waiting in line. Now, the problem is Amazon Web Services isn't able to accelerate its growth like this. Right now, there's overwhelming demand for artificial intelligence and data centers, but Amazon Web Services is showing growth of less than 18%. But the thing is, Microsoft's Azure and Google Cloud are different, right? I think that's a very serious problem. I asked about Amazon Web Services as generative artificial intelligence leadership and future acceleration. Andy Jassy responded like this. I really like the input we're building in the artificial intelligence field today and the service testing as well. Customers also really like and relate to it. I think we're still at a very early stage in terms of artificial intelligence and its adoption. So he says that the artificial intelligence revolution is just in its early stages and it's very important. But the problem is we can't sell it. I think that's the biggest issue. Now let's move down and I'll try to sum it up in one word from Miji Won. According to the earnings report for the second quarter of 2025, Google Cloud recorded a growth rate of 32% compared to the previous year and showed the fastest revenue growth among the top 3 cloud providers. It's understandable when it comes to Google Cloud. As the third largest company, its scale is smaller. With a smaller revenue scale, higher growth rates are possible. However, Google wasn't the only one that went up. Microsoft's Azure also grew by 31%. But in terms of scale, there's not a huge difference between Amazon Web Services and Microsoft's Azure. Nevertheless, the growth rate was only 17.5%. In this way, Amazon Web Services is still maintaining its number 1 market share. However, in terms of growth rate, we can interpret that it's clearly falling behind its competitors, Microsoft's Azure and Google Cloud. And also, Amazon Web Services has stated that currently demand is higher than supply. And to be exact, here's what they said. We don't think we'll be able to fully resolve our capacity issues within a few quarters. The problem is it's not being resolved well. Supply is severely lacking and demand is high, but we can't sell everything. The problem is that we don't know when this will be resolved. In the short term, you can see it as the management themselves saying that Amazon Web Services' growth trend may be limited. On the other hand, Google Cloud and Microsoft's Azure have announced large-scale investments in artificial intelligence and cloud infrastructure. So it's a situation where we can expect higher growth in the future. Amazon Web Services is currently in a slightly different situation compared to Microsoft's Azure and Google Cloud, a crucial point to understand. One more issue remains. Amazon offers more than just cloud services. To make matters worse, the Trump tariffs have had an impact. Now, the reason the entire market is falling right now is because of the Trump tariffs. What that means is Amazon's other business sector, not just any sector, but its biggest business sector. For now, the outlook for e-commerce is still very uncertain. So the outlook for e-commerce is also uncertain. Even the cloud business they relied on isn't growing as fast as anticipated. So, in my personal opinion, rather than seeing this as an opportunity to scoop up undervalued Amazon stock, I think it's actually more reasonable to reduce your investment at this time. The last content prepared for today is the MeJune podcast. The main topic of today's podcast is Meta. Meta surged by a whopping 11.25% in the market yesterday. As you all know, they announced incredible earnings results. The word amazing perfectly describes their earnings this time. Now, if you look at the title of this podcast, there's a claim that Meta's stock price could go up to $1,000. If that happens, there's a possibility it could rise about 30% from the current stock price. As of today, you might be thinking that the stock price is dropping and a correction is coming. If a correction really does happen, even though the momentum has been great so far, the wisest choice is to sell off the stocks that have dropped as the overall market declines. In that sense, I'm thinking how great it would be if Meta's stock price dropped again, but unfortunately, so far it's only dropped by about 1%. If Meta's stock price drops by about 10% along with the market, then that's definitely an opportunity you shouldn't miss. Anyway, the author who wrote this article, it would be good for you to listen to the podcast yourself to see on what basis the author claims that Meta's stock price could go up to $1,000. That's all for today's broadcast. The last broadcast we sent from the research team ends here like this. For the next broadcast, I think I'll be able to greet you from a new place in Malaysia with a new environment and background in about 2 weeks. For about 2 weeks, MeJune's broadcast will be taking a break, but during that time, please don't forget about MeJune. Please stay healthy until the day I return, and I hope you continue to have happy and successful investments. Let's keep investing in United States stocks together until we can all retire. Have a great day, and thanks. Hello, MeJune family. It's finally Friday, a day always filled with excitement. We have a few things to wrap up today. Once today is over, it feels like we'll have a lot sorted out.
It's Friday, MeJune. Please help me tidy up the garden today. Let's do our best. Yes.
Let's cheer up today and dig deeper into the analysis materials together. Which materials are we focusing on today? It's an analysis report titled The Road to Meta $1,000. Yes.
The title itself is quite interesting, isn't it?
It contains a rather bold claim that Meta's stock price could reach $1,000. Especially considering the massive investments, let's take a look together at what grounds they present for this. First, let's quickly go over this quarter's earnings that the report emphasizes. Earnings per share was $7.14 and revenue hit $47 billion, significantly surpassing market predictions. Yes.
The numbers were really good.
Digital ad revenue rose by $2.2 billion, a 22% increase year over year, making up nearly 97% of total revenue.
Yes, advertising is still the main driver.
And the number one active users, called DAP, also increased by 50 million, reaching a total of 3.48 billion.
The user base is also solid.
The third quarter guidance also exceeded market expectations, signaling a very positive trend. Up to this point, yes, absolutely.
That's right. On the surface, the performance is definitely strong. But the really interesting point that this analysis digs into is actually the 2-year cash flow, the free cash flow.
Free cash flow. How did that turn out? This
quarterly free cash flow was $8.5 billion, a 21.6% decrease compared to the same period last year.
The performance is good, but the cash has decreased? That's a bit strange.
That's exactly it. This report suggests that this very point could be misunderstood by the market, and at the same time, it believes that the key basis for the $1,000 claim is hidden here. The main reason for the decrease in free cash flow is that capital expenditures, or CapEx, for artificial intelligence and data centers have almost doubled compared to last year.
Ah, so it was because of investments. How much did they invest?
They invested $1.7 billion in this quarter and $30.7 billion in the first half of the year, which is an enormous amount.
Wow, that's really aggressive, yes.
This isn't just an increase in expenses, it's more like an aggressive bet for future growth. NVIDIA predicts that investments related to data centers will reach $1 trillion by 2028. That's how fierce the competition is in this field.
That's right, all the big tech companies are jumping in, that's true.
Meta is actively joining this trend by raising its capex guidance this year from $6.6 billion to $7.2 billion. In other words, this analysis doesn't just see the short-term free cash flow decrease as a cost, but rather reinterprets it as an investment for future value. And they're basically arguing that the market hasn't fully priced in this potential yet. Oh.
So, you're saying that all that massive investment is ultimately leading to an artificial intelligence strategy, right? They're said to be particularly focused on developing personal superintelligence, which I found quite intriguing.
Yes, personal superintelligence seems to mean an artificial intelligence that goes beyond just being a creator productivity tool and actually personalizes and optimizes the entire social media experience according to each individual's preferences and needs. That's right.
This could also become a new revenue-generating opportunity. In addition, the report mentions positive factors such as a stable advertising spending environment and rising ad prices, which are supporting this aggressive investment.
So, considering all these factors, what about the valuation? That's also important, right?
So, how much can the stock price actually increase?
Meta's stock price has surged over 50% in the past year, a remarkable increase. Even so, based on the expected 2020 earnings, the price-to-earnings ratio, or PE, is 24.1 times, which is still lower than the non-tech average of 26.0 times.
Oh, that's not as high as I thought. You mean it's the cheapest after Alphabet?
Yes, that's right. Analysts say this is exactly where they see an opportunity. They say the market is underestimating Meta's artificial intelligence-driven growth potential. Currently, the market's 2020 earnings per share estimate is about $29, but they believe this is too conservative.
Then what is the analyst's estimate?
In reality, they predict that next year it could be between $33 and $34, which means about 20% growth is possible.
That's quite high.
Yes. If we apply a fair PE ratio of 30, considering the current business momentum and artificial intelligence potential, the target stock price reaches around $1,000. That's the calculation.
A $1,000 target with a PE of 30, huh? Wow, that's definitely a pretty aggressive assumption.
That's right. Of course, this PE ratio of 30 is really the result of a lot of subjective judgment by the analyst.
The report would have included the risk factors. No matter how positively you look at it, there will still be risks.
Of course, it's mentioned. The biggest part is, of course, the high dependence on the digital advertising market. Yes.
With 97% of their revenue from advertising, any shake-up in the ad market will have a massive impact.
That's right. Another thing is the uncertainty about whether these astronomical investments in artificial intelligence will actually lead to the expected results.
You're correct, as there's always a chance the investment may fail. Does the $1,000 target fully account for these risks? I'm curious about that.
That's a key point. The report definitely puts more weight on the positive outlook, but it doesn't overlook those risk factors. Ultimately, the key to this analysis is how you interpret the tension between the short-term decrease in free cash flow and the massive capex investment. And you could say that it all depends on the belief that Meta's bet on artificial intelligence will succeed.
So, is it ultimately a matter of faith, which
degree is it? And I think this isn't just about Meta, but it's also connected to a broader question of how artificial intelligence investment is changing the way we value the entire tech industry.
In summary, this analysis suggests a target price of $1,000 for Meta, not just because of its current performance, but by focusing on the potential value that bold investments in future artificial intelligence could create. You could look at it that way. Yes?
That's right. The long-term deterioration of cash flow can be interpreted as an investment cost for the future.
When you come across this analysis, I hope you don't just focus on the target number, $1,000, but also critically examine the underlying logic and assumptions behind it. Lastly, let me ask you an interesting question. What if the personal superintelligence mentioned in the report is actually implemented successfully on Meta's vast user data and platform?
Oh, that's interesting. I think it would be tremendous.
How could this fundamentally change not just ad efficiency, but also the way you consume information on social media every day, or even the way you communicate online? I think it would be fun to imagine that.
Thank you for being with me today, and have a wonderful day.
The beginning of a small dream is important. Shall we plant a hopeful future together? Growing little by little every day, excitement blooms in my heart. Let go of your greed. It won't be any different this time. The result will just be another series of oligopolies. Even if the lights are dim and darkness comes, I'm not afraid, Miju. Let's hold hands and move forward. I'll become the light for the unseen tomorrow. Happy investing, supporting each other's dreams. Let's walk together down this beautiful downhill path. Happy investing, together with Miju, until the day we all boldly retire with solid results together as one.